There are three things why gold is going up. Number one, China started to resume its gold purchases. China's central bank just announced that they're going to resume the gold purchases after 6 months of pause. Also, the Public Bank of China and the government both announced that they're going to go ahead with a massive stimulus, which is the biggest in 14 years. The data which was released today, exports, imports from China and to China, are disappointing. Also, you can see that China is now importing less, which means that the supply that they're taking into production, that they're importing from Europe, Australia, Africa, are decreasing. If China is slowing down, everyone else is going to slow down. Therefore, China just announced that they're going to boost demand with a massive stimulus package in order to help the stock market and of course the housing market, which isn't in a good shape. The second thing is the rate cut expectation of the US Federal Reserve next week. You can see from the Fed rate watch tool that the expectation of the Fed going to cut 25 basis points next week have increased to about 90%. Now, I could argue that the Fed is going to cut interest rate next week because they already delivered 75 basis point rate cut this year. And if you look at the data for the past 2 months, it's fairly mixed. But the market is pricing in a rate cut, so that's why gold is going up. And of course, the last one is the geopolitical tensions. Even though the news are relatively quiet in Ukraine and Russia, now we have another problem in Syria. I'm an economist, so I'm going to leave the reading to you about what happened in Syria. But long story short, if a war escalates in Syria, which is, a big country in the Middle East, it could easily spread over to other parts of the Middle East where they already have tension. So this is why escalation in the Middle East equals gold prices going higher. Remember that Forex is giving out 75% of deposit bonus for new depositors. Protect your capital. You can find a link below the video. So starting the technical analysis after we discussed all the geopolitical, fundamental and macroeconomical factors which drive gold market. Just to recap, I summarized that all the drivers which happening around the world are bullish to gold. Well, most of them, not all of them, but majority of them. For example, China is buying gold. China just announced stimulus. Yields are coming down because of the rate cut expectation that the Fed is going to decrease interest rate next week. And of the war escalation in the Middle East, in Syria, which we all know is bullish for gold. Going back to the chart, we can see that gold has finally broken out from this ugly consolidation, which was going on for about 2 weeks. This consolidation was so disgusting I started losing my hair. But finally gold popped out from the resistance at 26.55, going all the way up to 26.76 and now retesting this breakout. And if I zoom into the chart, you can see that we have a very nice upward sending channel and price is respecting beautifully. Currently retesting the bottom of the channel, which conveniently lines up with the pivot at 26.54. So going down to a little bit lower to the 1 hour time frame, price is respecting this channel. And what I'm expecting, if everything stays the same, ceteris paribus, is to price come down a little bit lower to retest the place where it broke out from the consolidation. Remember that this was a 2-week long consolidation, so of course the pullback or the retest could be a little bit deeper because we have a lot of action going on within this range and the range is pretty big. But if everything stays the same and the war escalation fears and the rate cut expectation from the Fed continue to fuel gold prices, what we can expect is price to retest around the 26.50 area, and then we should have a very nice bounce back and go all the way to almost 2700. So this would mean, if everything stays the same and works out perfectly well, this would mean about 525 pips pure profit this week on gold alone. Now, but there is a massive problem with this. China, as I mentioned, just announced a stimulus package at the biggest in 14 years. Now, they did announce another stimulus package a few months ago, but there was nothing really happening, or they didn't deliver the kind of expectation that traders and investors were expecting, so the market pulled back aggressively. I'm not sure if this is going to happen this time because maybe the good leaders of China and central bankers learned the lesson the hard way. But what we can see is that the markets in China and Asia didn't close in positive territory. So I'm not sure it's because the previous disappointment, they are very cautious, or they are preparing or waiting for the New York session, the New York boys, to decide whether it's a good news or not. But if you look at gold and if you look at stocks, basically gold, natural enemy are stocks. So when the market mood is positive, that means there is a risk on mood on the market. So investors and traders favoring stocks and indices and all the other risk on assets before gold. But because looking at the market that the Hang Seng index didn't close in positive territory, that means that the market may not pull back that deep and it's going to rally from the current price level. So actually there's two entries right now. The first one is from the current price level and the second one is just below the daily pivot. Now you can see that I already have two positions open on gold. One of them was opened yesterday because I traded almost the market open or the next morning of the market open when there was a rebellion in Syria or war escalation in Syria. I immediately started buying gold. The second one was just 10 minutes before the video was made and I'm expecting further continuation to the upside. So current price level 26.64 and I'm expecting price to reach at least 26.95, 26.90. If you want the link to this chart, just comment link or thank you under the video and I'm going to post it under your comment. If you would like to join the AlphaFX community, remember that there is only one membership left for 2024. Yes, you heard it right. It's going to be closed for the rest of the year. Next year, I'm not sure if I'm going to open it January or February, but the prices will definitely going to go up. So if you want to take advantage of this amazing discount of £199, go to alphafx.eu, type it into your browser, go to purchase and select the Pro plan. This is all you need. It has the morning briefings, it has the live trading, and you get access to all of my trades if I enter into any. So thank you so much for listening into today's analysis. Good luck to you this week. This is the AlphaFX.